what are you seeing right now and how AEC firm leaders are navigating today's economic environment while trying to grow their firms, right? And build,
Right.
wealth, personal wealth, but they have to navigate a lot of things in the economy.
I know that you have a broad audience. So you well may have a CEO of a company that has 13 or 14,000 team members. And you may also have someone on the program today watching that has 30 team members or 50 team members. So as we speak today, I think we're going to be cognizant of that with some of our discussion. But when we look at the U.S. economy right now, I would say that we're in a slight modest growth. We don't see any type of a recession on the horizon. A recession is typically defined as 2 quarters of negative GDP. So we're not seeing that. We do know inflation has moderated and the labor market remains tight, with unemployment around 4.3%. And for context,
So what is the current economic outlook for the infrastructure and construction industries? And what do you, as leaders of AEC firms, need to be watching out for to understand what's coming? In this episode, I have with me Bill Keene. Bill is the founder and CEO of Keene Wealth Advisors. He works with many engineers and engineering companies on finance. In today's episode, we're going to discuss those important items. We're also going to discuss how ESOPs and other ownership structures can support recruiting and retention. We'll talk about some common financial planning blind spots and how to prepare for some of the things that your firm is going to have to deal with as we move forward in today's economic climate. Now, before I jump in with Bill, I do want to tell you a little bit about AEC PM Connect, a series of in-person events that we've created at EMI for AEC project managers and the leaders who develop them. If you want to stay on top of PM trends, elevate your team, and deliver stronger project results, these full-day events are built for you. We're coming to New Jersey this June and Kansas City in October. Learn more at aecpmconnect.com. Again, that's aecpmconnect.com. And here's a quick word from our AEC PM Connect sponsor, Keene Wealth Advisors. Keene Wealth Advisors is a fiduciary investment advisory firm based in Overland Park, Kansas. They specialize in helping engineers structure retirement strategies and tax optimization systems and have a unique understanding of ownership structures of AEC firms, including ESOP, privately and publicly held companies. For more information on Keene Wealth Service offerings or to find their long-running podcast, Keene on Retirement, along with Bill Keene's best-selling book entitled Keene on Retirement, Engineering the Second Half of Your Life, visit KeeneWealthAdvisors.com. All right, I'm Anthony Fasano, and this is the Civil Engineering CEO. All right, now I want to welcome my guest for today. Bill Keene is the founder and CEO of Keene Wealth Advisors. He's also been on our podcast at EMI multiple times and has become a good friend over the years. We've done a lot of great events and work with Bill. Bill, welcome to the Civil Engineering CEO.
thank you, Anthony. It's a pleasure to be on. I think this might be my 5th appearance on a variety of your shows. So grateful
Yeah.
to be here with you and your audience.
My team keeps telling me we're going to have to start the Bill Keene podcast soon, but he's already got that. You could find it. We'll talk about that later. So.
Yes, I do, which you've been on. So
That's right. That's right. All right. So, Bill, for those that haven't heard all the other episodes you've been on, tell our listeners a little bit about yourself, kind of, where you're at in your career today and, what you do on a day-to-day basis.
Yeah, for sure. It's interesting. I knew as a young boy that I wanted to get into the financial advisory business. I remember sitting on my father's couch when I was 10 or 11 years old and waiting for his unemployment check to hit the mailbox. And for whatever reason, as a young boy, I really internalized the anxiety and stress around money and around being able to take care of our finances and ultimately him and the family. And it caused me to find a career ultimately in this field, which I'm in my 35th year as a financial advisor, now a firm owner. We own what's called a fiduciary registered investment advisor here in the greater Kansas City area. It's Overland Park, Kansas is where we're formerly headquartered, but it's been a really fun journey working in this marketplace. At this point, we have clients in 40 states, Anthony. I don't know if you realize that. But over the years, around 30 years ago, I started working with my first engineer. someone from one of the companies here in Kansas City. And I know we have our AEC PM Connect here in Kansas City, partly because of the strong presence of engineering firms here in town. And you might laugh, but I really enjoy, and I say that with all due respect, I really enjoy working with the engineering mindset. A lot of financial advisors I've shared with you before steer clear of the engineering mindset. They think engineers are too picky or have too high of standards, or they want to know too much detail. And I would say that they do have high standards and they do want to understand detail. I mean, the work they're doing is life or death, not to over exaggerate it, but it truly is. And so being able to put together a financial planning process that incorporates all of the things that most people don't realize go into a long-term secure financial plan, and then complement that with the investments, which I always call the engine to the plan, and do that at one point of service with a specialization in the AEC industry has been really a privilege to me and my team. Now I have 20 other professionals here at the firm as well, besides me. Um, and we have a very unique niche or specialization in the AEC field. And, I met you a number of years ago when my book, Keen on Retirement, Engineering the Second Half of Life, was first produced.
That's right.
My team reached out to you, and I've since produced a second edition, and that's how our journey began. My team and I have also spoken at the NCEO conference on the ESOP conference, topic being how to make sure your employees and team members understand the power of your benefits, really understand. We can get into that a little more on our chat today, but how to make sure the team really understands whether you have an ESOP or you have other equity programs, how to make sure the team really understands it and is excited about the alignment that's there. So that was kind of a topic that we had there. And you also mentioned we have a podcast also called Keen on Retirement. It's been out for now 12 years. So one of the early adopters on podcasting. Maybe not, I don't know if you were first or I was first, Anthony, but we've both been doing them a long time.
Yeah, absolutely. And that's why I'm having Bill on today, because of his niche of working with so many AEC firms and working with engineering professionals. I think the one thing, I think on the positive side, to Bill's point, because we are detailed as engineers, we can get detailed into our finances and we can pay attention to the right things. I think on the downside, we're so into our projects and our work, we tend to forget about our own personal finance, which is why I think a lot of the stuff that Bill has done through his content, his books, and coming on our show, he has really helped to educate engineers on the importance of taking care of their own personal finance, which I think is critically important. And I had to go through that journey myself of getting more focused on my own finance. So I think that a lot of good stuff there. A lot of stuff that we're going to talk about with Bill today. But Bill, the first thing I want to ask you about is, what are you seeing right now and how AEC firm leaders are navigating today's economic environment while trying to grow their firms, right? And build,
Right.
wealth, personal wealth, but they have to navigate a lot of things in the economy.
Yeah, it's certainly interesting, and I might add that in my 30 years or so of working closely with the engineering community and really team members of engineering firms at all levels, but also the executive suite, owners, founders of smaller firms that have had a growth trajectory. I can recall a firm here in town that when I first started working with the first team member from that firm, they had something like 700 employees, and today they're approaching 15,000. So I've gotten to see the evolution of the ownership structure, the expansion of those firms, what happened to the culture as things evolved. Other firms that had several thousand employees with an ownership structure where there was different share classes of stock, and they weren't quite able to get that stock bought yet to form an ESOP back from some of the original partners, and finally were able to do that. And then a few years later, form what's called an S corp with their organization, as it's grown now to 13 or 14,000 team members. So working with firms like that and seeing the trajectories, and then also working with, like I said, startup firms, or maybe not startup firms, but an engineering firm with 50 or 100 employees, where it's completely owner led and 100% owned by one or two people, and how they're thinking about that next step. So on our discussion today, I know that you have a broad audience. So you well may have a CEO of a company that has 13 or 14,000 team members. And you may also have someone on the program today watching that has 30 team members or 50 team members. So so as we speak today, I think we're going to be cognizant of that with some of our discussion. But when we look at the U.S. economy right now, I would say that we're in a slight modest growth. GDP is coming in at around 2%. We don't see any type of a recession on the horizon. A recession is typically defined as 2 quarters of negative GDP. So we're not seeing that. We do know inflation has moderated over this last year or two, just over 3%, but not quite back down to the 2% target that the Fed kind of announces is what they would appreciate or enjoy. Then the labor market remains tight with unemployment around 4.3%. And for context, we typically think a healthier, favorable unemployment rate broadly in the United States is somewhere between 4.5 and 5%. So 4.3 is handily right in that range. And I know a lot of your listeners and viewers and all businesses, but specifically here, are paying attention to the cost of capital, and that would be interest rates. Right, we're wanting to see where rates are going. Rates have risen in the last 3 or 4 years, but historically, I remember when I got in the industry initially, I was this is a long time ago now, but you would just assume your mortgage was going to be 10%. And when you ran calculations, what can I afford? You would think 10%. That's the mortgage rate. That was normal back then. So today I think we got spoiled in home ownership and then also in business where the capital was so cheap for so long. Fed policy holding steady right now, watching inflation, watching labor, watching the tariffs, watching the uncertainty around tariffs all at once. So I think with that kind of backdrop in mind, understanding that being selective in our markets and selective in what work, the firm leaders that I'm following and talking to regularly, a lot of them now are leaning on public over private work, with public construction up $500 million, running at $500 million annualized right now. Which is $500 billion. Excuse me, that's a little bit different there. $500 billion annualized this year, and firms that have overweighted private land development are feeling a little pinch right now over folks that have leaned into the public work.
Okay.
So I know that I watch a lot of your CEO podcasts as well, and I know a lot of your firms that have been on your show and that I speak with are nimble, and they're able to be out ahead of some of those trends and move work and team members, maybe even across the country when necessary. But understanding that seeing that, I say, leading key performance indicator is important. Another thing that a lot of leaders I'm seeing are doing that are really in tune with what we call leading indicators, not lagging, but leading, is really paying attention to the capital markets and not just historical industry reports. So here's a couple of examples. The muni bond issuance. So municipalities do not just issue municipal bonds to sit on the capital. They issue bonds to put that money to work. And so that is year over year here about $130 billion year to date in 2026. That is a public pipeline for 12 to 18 months out. Typically, they're looking to put that money to work. I think we'd be remiss if we didn't talk about the hyperscaler CapEx guidelines. I mean, something like $700 billion across the big four, which is driving massive demand in infrastructure right now. And then the reshoring that's going on. So you're seeing TSMC and Samsung and Apple Houston, NVIDIA is down in Houston. You're seeing these, what we're calling reshoring, where we're bringing business back to the States. I think leaders who are reading those signals and positioning their backlog differently than leaders that are just looking at last month's bookings are going to be way ahead. And I also, if I could add another thing, and I think it's important to talk, the leaders that I see that are really dialed in on treating their talent as the ultimate growth asset, are benefiting. Leadership development, training, soft skills. I'm in a service industry. You're all in service industries. So it's training on the soft skills, the people skills, not only externally, but internally, and creating intentional mentorship assignments inside these firms has paid off huge. Being out in front of the AI, I think that's a huge topic of discussion that I see at all the conferences, the engineering conferences, and also, frankly, the financial services conferences. Are you out front? Are you a fast follower? Are you a drag along? And I got those phrases from one of your other guests, Kevin Haney from Colliers. I really enjoyed watching his show, and he talked about, I think most of the people that, including myself in my industry, being a fast follower is where we fall, and I think that's where most people are falling right now. But not looking beside it, but looking for AI to help them with processes and things that they can keep their engineers engineering.
Yeah, lots of good stuff there. I mean, I think the point about the leading indicators is really important as you grow your firms to keep an eye on certain indicators that can tell you where things are going, which can help you, of course, make critical decisions in growing your business. So some of the stuff that Bill talked about there is really important. And Kevin Haney was a great guest. If you haven't heard that episode yet, definitely check it out. But he did talk a lot about CED's approach to AI using some of the terms Bill mentioned. And what I liked about what Kevin said was you don't have to reinvent the wheel, right? If there's a company like Bentley that created a program and you're using it, they're probably
That's right.
using AI to keep it up to date. So in that case, you're safe. But you may be able to create some custom tools, admin wise, and things inside of your company. So just making sure you know where to focus your energy on when it comes to AI and things. And obviously, I agree 100% with everything Bill said about leadership development. I mean, that's what we spend a lot of our time with here at EMI, and having a real smart strategy for developing leaders in your organization can make or break your organization, quite frankly, because you've probably heard the quote, people don't quit companies, they quit their managers,
That's right.
right? Their managers are their experience every day when they come to work. Those are the people that they work with. So you really need to invest in those leaders in your firm if you want to grow sustainably. In the AEC industry, skilled project managers are the backbone of success. EMI's AEC PM certification offers tailored training, ongoing support, and exclusive access to premium content that keeps your team sharp and effective. From foundational training to advanced leadership tools, set your team apart with certified growth. Learn more at aecpm.com. That's aecpm.com. So,
Right.
Bill, from your perspective, what would you say is kind of the current economic outlook for the infrastructure and construction side of things? And, how can some of these leaders be thinking about this as they plan for growth?
Yeah, so I do stay, because we work with so many in the field. I do stay in touch with some of the industry data. Like, for instance, the ASCE report card that comes out. Infrastructure earned its highest grade in the report card's history this most recent period. But they've also identified a $9 trillion need, $9 trillion over the next decade, and a funding gap there. Of course, I think there's probably always funding gaps
Right.
when the demand is that strong. But I think I would just say that the need is durable. No question about the need being durable. So when folks are staffing firms and thinking ahead, I know it's a dance as certain sectors in certain parts of the country. We already talked a little bit about things that are stronger, and we know some of the areas that aren't. Having the professionals on site to keep them billable, to be able to pivot them when needed, but seeing the just general broad arching demand is encouraging. The Infrastructure Investment and Jobs Act that was passed in 2021 was about a $1.2 trillion act. And I think the number most people miss on this is that about $600 billion has been allocated now, but only 300, just under, has been obligated.
Hmm.
So when you look at these headlines, I think and the difference is, yes, they've allocated, they've said money's going to go to these places, but obligated is where contracts have actually been written and committed, formally committed. So I think firms that have planned their 2026 budget and plan around allocation numbers may be disappointed. Firms that built them around obligation numbers are going to be on or ahead of plan. We look at the Dodge Momentum Index, which is a leading indicator of commercial and institutional construction spending 1 year in advance. That was up 37% in 2025. It's cooled this year a little bit, but that's something that we look at as just somewhat of a leading indicator as well. Transportation and utilities remain very strong. Private land development and commercial have been soft. So, if you look at a firm's mix, if you're 60% private commercial and land development, 2026 may feel a little different if you're 60% public water and transportation. So, and I'm certain that your listeners and viewers are out ahead of those numbers, but they're very interesting to me. Backlog expectations, it's a huge factor. You're always talking about backlog, whether you own your own company and you're a smaller firm, you're tracking backlog, whether you're an ESOP and you have a private company come in and value your company every year. Backlog's one of the huge levers there, whether you're a public company. I work with team members and leaders at public companies as well. Backlog is a huge part of what the market typically is looking at for valuation and for the future. But the economic competence has never been higher. It's been optimistic right now. 91%, just over, of the people in this survey, the ACEC survey that I was reviewing, do cite political uncertainty as something that they're looking at. So they're working cautiously. But I might contend, and maybe this is wrong, but I might contend that there's always political uncertainty.
Yeah, sure.
So I don't know that that's new, but it is something that's there. So I think backlog quality over size, how much of your backlog is high conviction versus delayable, mix resilience, being able to move, how durable is your revenue, being able to, if private development stays soft and utility work stays strong, being able to pivot if you can. And again, not to repeat myself, but I really do think that capital markets is a leading indicator. Being in aware of the muni issuance, the hyperscaler CapEx, the reshoring announcements, telling us where demand is going and being out in front of it, pretty important. And finally, I think it'd be hard not to mention, and this is for all environments, strong risk management processes and protocols in place at all times. And, we had someone that I'm just proud to know well, Chris Baxter, come in to the AEC PM Connect here and did a presentation for us. The Chief Risk Officer at Burns & McDonnell, sharing a lot about his thinking with the group. It was a fabulous session. But understanding that risk management process and being on top of it is probably doesn't need to be said, but it probably can't be said enough, right?
Oh, absolutely. I would agree with you 100%. I mean, risk, we do so much PM development work, and we hear all the time that our PMs just aren't thinking about the risk enough ahead of their projects, right? They want to jump in, they want to execute the project. But if you don't think about your risks before the project, you could be in trouble. And the same goes for the overall operation of your organization in terms of growth and your risks and identifying some of the areas that Bill spoke about. And, one example that I was referring to before is listening to some of the numbers and the indicators that Bill mentioned. One decision you might make from that is we need to diversify our services a little bit more, right? If we're very heavy in private development or land development, listening to some of the, or keeping an eye on some of the indexes that Bill is talking about may cause you to say, we need to get some more government contracts, right? And that's just one example of how some of these metrics can be really good. And the other point that Bill made that was really interesting to me was the number of trillions of dollars that ASCE is saying that we need in terms of rehabilitation of our infrastructure. And while
That's right.
the government will now have to make decisions in the future about funding with the funding gap, I think when infrastructure needs funding, a lot of times what the government, of course, likes about that is it's massive improvements to our civilization. It garners a lot of jobs, right? It gets the economy going.
That's right.
And I'm sure that when they're looking at where they're allocating their funding, they do put an eye on that, of course. That's how we got that first chunk of funds that Bill was referencing before. So from that perspective, just a lot of positives, in terms of the growing firms right now, growing the AEC industry. And that really transitions us nicely into our next topic, because one of the things that you will have to grapple with a little bit as you grow is hiring and retention. It's such a critical component of being able to have a healthy AEC organization. And so what I want to ask Bill about now is I want to talk a little bit about ownership structure. And what I'd love to hear from you on, Bill, is how do ESOPs or maybe different ownership structures impact recruiting and retention? And what should firm leaders really understand or think about when they're utilizing ownership structure as a competitive advantage?
Yeah, well, before we go there, I wanted to share that the all the infrastructure spending from the government, Anthony, it's bipartisan. Did you realize the support for that is bipartisan? I think it's important to make that note. We don't have a whole lot of things right now that are bipartisan.
That's right. That's right.
But that is something that is bipartisan. So, when it comes to the ownership structures, we all, in all of our businesses, we want to have our key team members in alignment and excited about the future with clear career paths, and to be able to let them achieve all the goals they have in their lives for their families, and they're just being able to produce and have purpose without having to leave. So when I hire young planners here at Keene and new employees, my Matt Wilson, who's the CIO and president of Keene Wealth, joined me as an intern 25 years ago, and he's still here. He's the president and CIO and on the cap table of the firm. It's a
Wow.
25-year relationship, and that's extremely encouraging for young people when they come in. And when I say to someone that comes in, I want this to be the last place that you work. I want this to be the only place. That's my objective. My objective is to create an opportunity and an environment here that you don't have to leave to achieve all your goals and dreams in your life and to have the purpose behind that. I think it's really important that we think about alignment. And what does that do? That makes the leaders of the firms having to think about growing and expanding their capabilities. If you slow down, some of your best people are going to go out past you, they're going to leave. And so ownership structures are incredibly important. And there's quite a few. If you're at a publicly traded company, you can own the shares of the stock. Most of the firms that we do work with, though, are privately held. And what we've seen is the ESOP is becoming the ownership of choice for companies and for founders even exiting. Founders who want to maintain the culture, who do not want to watch their firm culture get watered down maybe, or even completely changed by a private equity buyer. And that is not to say it's no knock on private equity. It is just, it is kind of what it is. When you sell internally to an ESOP, you're able to retain the culture of the firm. And I think some numbers to really understand. You talked about retention, and I talked about retention. 53% have a longer medium tenure if you have an ESOP in place of your team members than if you don't. And the NCEO survey that I follow closely was based on owners aged 28 to 34. So really your next gen talent. 92% of those same folks have a higher median household wealth, and up to 52% higher productivity, and a 4 to 6% annual productivity premium after the ESOP is adopted. Now, a lot
Wow.
of engineers and team members that will be involved in ESOPs will look at this and say, it sounds good, but there's no real proof. Actually, there is proof. ESOPs paid out more than $166 billion in benefits alone in 2023, and roughly 15 million Americans participate in employee ownership plans now. So this isn't a fad or a passing fancy. And the last number I looked at, about $2 trillion of value is inside employee ownership plans around the country. So these numbers are real. It's not a fad or a passing fancy. I did notice too, from a resilience standpoint, during COVID, ESOP firms were 3 to 4 times less likely to lay off people compared to non-ESOP firms. And the concept of having to replace a licensed senior civil engineer, I've seen some data up to 2 times annual salary to have to replace someone after recruiter costs, search costs, signing bonuses, onboarding, 6 to 12 months of ramp before they're billable, lost project continuity, client, the whole thing, client relationship disruption, and so forth. So retaining professionals should be a huge focus of folks. And then the recruiting, right? So you're never going to probably be able to match a PE consolidator's salary, cash comp. Maybe you can, but it's likely you can't because they have lower cost of capital and their portfolio is spread across various risk factors. But
Right.
if you can lay out a real ownership with a documented wealth trajectory and a career arc that compounds under these formats, I think it's a almost, I don't want to say a no-brainer because there's other considerations, but
Right.
which we can
It's
talk
almost
about
a
too. I
no.
can talk
It's
about some
almost
of
a
the
no-brainer.
downsides of it too. So
Yeah, but it's almost a no-brainer. I mean, I think if you're sitting across the table from someone you want to hire, and like Bill said, you're able to show them a wealth projection with an ownership model. I know from talking with a lot of technical professionals, that's highly of high interest to them, right? When they're thinking about their future and what they want to do in terms of their family and so on and so forth. So I guess that's a good transition to our next question, which is when you work with engineering leaders, many of whom have a significant portion of their wealth tied up in their firm through ESOPs or other ownership type structures, how do you help them to think about, their broader financial future, right? What are some of the blind spots that you see when it comes to balancing kind of the business value with their long-term financial and their retirement planning, which I know is like a huge focus for you?
yep. You mentioned it earlier. Folks are so focused on their projects and their work that a lot of times this whole personal wealth plan has been on autopilot. It truly has. And for most firm owners and leaders, so I say firm owners, but also the leaders of these firms, up to 80% or more of their personal net worth is in the asset that is private, illiquid, and correlated really with every macro risk we've been discussing today, and dependent on their own labor as well. So that not only is it financial assets, it's benefits and really everything in their life. So I think becoming aware of that, I say that all progress starts with the truth. Now, I'm not saying anyone's trying to be untruthful. What I'm
Sure.
saying is a lot of people aren't in tune with these factors. And so understanding where someone stands at a certain point and just being objective about it. I always say that I think someone should have a financial plan. We do a lot of education and training for our clients' kids coming right out of high school and college. I think if we could get folks to understand about these things at that age, we could make a real meaningful difference, and we are long-term in our country. But if we look at someone that's been in business, I would say at the worst or least, you should have a financial plan in place at least 10 years, if possible, before the event. And that event can be a sell of all or a portion of your holdings into an ESOP. Let's say you don't have to sell the whole thing to the ESOP trust. You can sell it in pieces over time, or you could be someone just at a high level or at any level inside one of these companies that were just retiring, and that's your
Right.
event. Your event is retirement, and in any case, you're going to be presented with a lump sum of capital that you now need to make last the rest of your life. And it can be very daunting for folks a lot of times because they haven't had to have a whole lot of, maybe don't even have the choice inside a lot of these ESOPs of how that money's been managed. It's done for them. And actually the money has been put into the plans for them. They haven't had to add anything of their own money into an ESOP. Not that they haven't earned it. They've certainly earned it by their hard work and hours. But
Right.
the firms deposit money into those accounts for them. They may have a 401k they've contributed to, hopefully, as well. But they haven't had to think about the broader aspect of having this big amount of capital laid in their lap upon retirement or exit, and how the heck where's it going to land, and how are we going to make it last the rest of our life? Because you don't have 30 or 40 years to make it back. And so I think really important is having a comprehensive financial plan put together at least 10 years before the event. If it's sooner than that, you just now would be better. If it's not 10 years, you're closer now. Having begun to build a diversified portfolio outside of your retirement plan is really crucial. So hopefully along the way, some people say, should I sell my business and monetize it? And I say, well, you can, but you can also, as you're going, capture some of the revenue, some of your earnings, some of your distributions, and create portfolios. So sell it along the way. It's a way I think about it. Make sure you're
Right.
capturing make sure lifestyle creep doesn't use all of your income. Start building after-tax portfolios and brokerage accounts, because it will give you a lot of choices once retirement hits. Inside these plans, there's diversification windows you should be very aware of, especially in the ESOP. It does allow you to diversify out of some of the privately held securities once you hit a certain ages. Liquidity after retirement is really important. Some of these firms, they all have different qualifications and timing. Some pay out over 3 years. Some can have up to 5 years to liquefy your resources. Some pay it all at once. And then some have things called LTIPs, long-term incentive plans, or SERPs, supplemental entire retirement plans, or even deferred comp. And thinking about, how am I going to receive this money, in what order post-retirement, what's that going to do to me tax-wise, if we don't look at it first, you're just going to have to deal with what the default, if you will. And the default can be pretty troubling if everything comes in at once. Not understanding when the wealth comes and how it's taxed, I think, is super important. And I mentioned this, a lot of folks don't have experience really managing money because it's all inside the plan. So there's a lot of behavioral finance that goes into the emotional side of receiving. I don't want to call it a windfall because you've worked for it your whole career, but it can be daunting. The emotional aspect now of the things that we're talking about and dealing with market volatility. So those things, tax sequencing, whether it's Roth conversion windows, the IRMA cliffs. IRMA has to do with Medicare, understanding how your healthcare will work post-retirement. If you're charitably inclined, charitable bunching, donor advised funds. These are all things that can't just come together at once. They have to be thought through years in advance. Ideally, they can come through at once, but ideally it's thought through years in advance. And of course, estate and generational planning. It's not just a will and a trust. I mean, if you own a company, there's buy-sell agreements, there's ownership structures, key person insurance, different entity layering. And those are some of the things I think that folks, you ask me blind spots, and I've listed off this litany of things, but I'm afraid they all are blind spots, including your spouse in all the
Right.
planning. I mean, we encourage, or we actually, I say we require, I can't technically require everyone to bring their spouse, whether it's the man or the woman that kind of leads the financial side of the house. There's usually one that does, but really being sure to include both partners, both spouses in this process. And then finally, most of the folks I work with at the that are type A, that are driven, that are running these businesses and that are at the leadership levels, a lot of their identity is tied up in their work. The
Right.
identity is their work. And so one of the questions we walk people through, it's again, this isn't dollar signs and decimal points. This is more life wisdom and being a
Yeah.
thought partner. It's what are you retiring to, not just what are you retiring from, getting out ahead of that years in advance.
Yeah. All good stuff. And I think the key takeaway for me from everything Bill just said there is engineers are good at engineering. But if we want finance help, we got to get help from financial professionals because it's just too important for you to try to wing this stuff on the side and I'll figure it out later. I know I have a 401k. I'll just let money keep going into it because we don't know, right? And I've gone through this process myself. We don't know, and we need to get help. And someone like Bill and his team are incredible resources. And he has so much free content, which in a few minutes here when we wrap up, I'll let him tell you where you can find that information. But Bill, I want to ask you one last question before we let you go here. When you look at financially successful firms, how do leadership skills influence both the profitability and their project outcomes?
Yeah, I think, I look across. It's interesting because this question may not necessarily be for engineering firms, AEC firms. It could be any firms, but for engineering firms, I think the first thing is the ownership culture. And, our good friend Greg Graves, I actually had this, I would give Greg a plug if you don't mind. He's got
Yeah.
his book, The Create Amazing. Remember, Greg was a
Oh
speaker at our
yeah.
AEC
You
PM Connect, a long-term CEO of Burns& and McDonnell, and he was phenomenal with the culture. And
phenomenal.
there's many other leaders that I know, but ownership culture, not just ownership structure, whether it's an ESOP or any other ownership structure. I think it's really important. And the leaders that I've seen in this vertical are talking about the bigger purpose. And it might sound woo woo, but it's the bigger purpose and the lives that are changed with both their clients, the broader public, and their team members. And most of the firms that we interact with have a broader community initiatives as well. And reminding the team, not just reminding the team with words, but living it, leading by example, reminding them of the difference they're making. And I think that's the leaders that I've seen that have been successful are doing that. I think we call it in our industry right fit client. So when a client comes to us second here, we're interviewing them just like they're interviewing us. We want to make sure it's a good fit. I wouldn't want someone to bring all their assets to us for us to realize a year later that they weren't a good fit. So I think client selection discipline in the engineering AEC world is extremely important. Saying no to work that won't be profitable or won't be referenced well or will
Yep.
pull the firm off strategy. I call it staying in my lane. I mean, you think about the whole world of financial advising. Folks have said, why did you have this specialization in engineering? Didn't your market get smaller when you specialized and stayed in your lane? And, I'm not looking to have 100,000 clients. I'm looking to be an incredible resource
Right.
for the clients that we serve. And that's called staying in your lane. And we've done very well with that. And I see engineering firms that do that. Of course, firms have different verticals and each vertical stays in its lane, right? I mean, depending on the size of the company. Third, I think investing in the next gen. I mean, servant in leadership by example, investment in the next gen. We've already talked about it earlier, training and developing, trusting them to lead and execute with an intentional mentorship along the way. You had another guest on named Craig Casey from Burns& and McDonnell,
Yes.
who's also a friend of our firm. And he did a great job talking about how he trains, develops, and trusts his team members to go out and execute on projects. Is he there as a backstop? Yes, but he trusts them with that mentorship. Two more: clear financial literacy across the firm. So there's two ways to think about this. One is that PMs can read their own P&L. It doesn't just live in the CFO's office. They understand the difference between billable utilization and realization in these projects, and that information is shared. The other way financial literacy needs to be talked about is showing that the team members that you truly care about their long-term financial independence and you're explaining the power of the benefits, whether it's an ESOP or another ownership structure, you're explaining that to them regularly. A lot of firms think that when their 401k provider comes in, they're doing that. But what we found is that really what they're doing is coming in most cases, a 401k provider coming in, educating the team, maybe doing a Zoom here and there. They're telling them what their choices are inside the 401k possibly, but they're not really running a long-term financial plan with all the things I've mentioned today incorporated. So the employee, the team member can't see out into the future like I think is really important that they should be able to. Because I think we all share one goal, and that's to be able to have work become optional at some point in the future, wherever you're at in the starting point.
Amen to that.
And those are things that I think are extremely important. And I'm seeing that consistency in leadership across all the firms that have just been phenomenally successful that we've worked with.
Yeah, that's great. That's really good intel. I mean, a lot of us want our firms to be successful, right? When it comes to finance and project outcomes, and those are things that can be really good for us to strive for, as Bill just laid them out there. So once again, he is Bill Keene, founder and CEO of Keene Wealth Advisors. It's always a pleasure, Bill, to have you on the show. You always come with great information for all of our listeners. Before we wrap up here and say goodbye, I do want to, just share your information. I want people to be able to find all the resources that you have available to them.
Yes, thank you. So our website is keenwealthadvisors.com, and you can find our podcast there. You can also find the podcast Keen on Retirement. I think there's 275 episodes. Wouldn't expect you to listen to them all. You can just start with the most recent. That's on all the major channels as well as YouTube. So we have a large following on YouTube because they can watch the videos as well. We do a monthly webinar. I hit on a few things up front around the U.S. economy. My president and CIO, Matt Wilson, does just an extremely good job talking about all the leading indicators that we look at on our market outlook that we do actually on a quarterly basis. That's, I believe, is coming out here actually later this week. And all that can be found either on our website or the YouTube channel or the other platforms for the podcast, keenwealthadvisors.com. And my email is bkeen@keenwealthadvisors.com. I love getting questions and feedback from our engineering audience.
That's great. And I will just give Bill a plug for, again, his book, Engineering the Second Half of Your Life. Now, in the second edition, I read the book. Retirement was very confusing to me. Once I read Bill's book, he breaks it down for people that do not have financial expertise. It's a very easy to read. Yeah. It's very easy to wrap your head around. I've shared it with several family members. You can also find information about his book on his website under resources. So I highly recommend that you check out the book. And he's also been gracious to share it with attendees on our AEC PM Connect event, which he sponsors, every year because he loves being involved with it and hosts it at his place. So Bill, once again, thank you so much for always being available to our audience, always sharing all of your kind of wisdom and information about the industry. We really appreciate your time.
You're very welcome, Anthony. Thank you for having me on. It's always a pleasure.
I hope you enjoyed my conversation with Bill. He has so much expertise in the financial realm. I'm glad that he was able to come here and share with all of us. So if you enjoyed it, please subscribe to our channel here so that you can get future videos. We put out videos on a weekly basis to help AEC professionals become better project managers and leaders. I'll see you next week.